New day, new lecture, and brand new marks. CA Inter as well as CA Final. This one is for all of y'all. Watch it till the end. Guys, I love difficult tax topics. Don't get me wrong. I like it because then that gives me an opportunity to simplify it and to get you a solution how to understand it, how to by heart it, how to revise it very often, and how to ace your tax exams. That's what just my attempt is in SMAT Quickies. Guys, SMAT Quickies are like a trailer of my real lecture. They're short version, they're short videos to help simplify complex tax topics. Today's lecture is based on a topic called TDS. Although TDS is great practically, but from an exam perspective, there are lots of different sections, and it's very difficult for people to understand next by heart and next reproduce it in the exam. So I'm going to give you a couple of really good shortcuts. We're not dealing with the entire chapter, but a couple of good ones. That's a small trailer of what happens in a TDS lecture online as well as offline. So here we go. Let's do this. So all my subjects, all my chapters are dealing with example, and this example, guys, the entire TDS is based on a person who's starting a cafe. Guys, this person who's starting a cafe, he initially took the cafe on rent. So initially he took the cafe on rent. Basically, he took the space on rent, he took the plant and machinery, the kitchen equipments on rent, he also took the furniture on rent. When the cafe was established, he decided to buy the immovable property. So he acquired the immovable property. So congratulate him because he acquired the immovable property because his cafe was well set. And then unfortunately, there was a metro which was supposed to go right above that restaurant. So they legally acquired that restaurant property. So we're looking at 3 TDS sections, guys. I could have done all of them, but this is a SMAT quickie. So we're looking at only a few sections and with a lot of shortcuts. So initially you rented it out, then you acquired the property. And unfortunately, because of a metro going above it, the government legally acquired it from you. Now, before we move ahead, guys, what is TDS? Let me give you an idea about what is TDS. When you go to a restaurant, generally the restaurant owner allows you to have your meal and then pay your bill. But what if the restaurant owner said that you pay your bill, the bill is 1,000 rupees, but what you do is before you start your meal, pay a little bit. While you're eating the meal, also pay 5%, 2%, 1%, 10%, 20%, and whatever the balance is at the end of the enjoying the meal, you can pay. Guys, this is the same thing how tax works in India. You first pay some advance tax. Then there is some TDS which is deducted, and then whatever remains, guys, is paid through self-assessment tax, and that's your total restaurant bill, or that's your total tax that you need to pay at the end of the year. Guys, we're looking at 3 sections of TDS right away. Guys, the first thing that you do initially what you do is you rent. So 194I is on renting. And what are you renting? You're renting land and building, that is a cafe space. You're renting plant and machinery, that is a kitchen equipments, ACs, etc. And you're also renting furniture because you're new. So 194 initially you rent out place, and when you rent out, you need to pay some rent. So you're the payer here. You're the payer, and I don't like the word payee. I write the word receiver, at least for understanding, so that there is no confusion. So there is a payer, that is you, and there's a receiver, someone who's given you all these things on rent. Let's say you're making 3 different payments of 1 lakh, one for land and building, one for plant and machinery, and one for furniture. Per month, you're paying 1 lakh rupees. That's about 12 lakh rupees in a year you're paying. Section 194I says that at the time of payment or at the time of credit, whichever is earlier. Guys, why early? Because the government is very eager to get your money. So at the time of payment or at the time of credit, whichever is earlier, you need to deduct tax and pay it to the government. On all these 3 payments, if the payments individually are above 2,40,000. So if you're paying low rent, don't worry, this is not for you. But if you're paying high rent, that is more than 2,40,000 in each of these categories, then you got to deduct TDS. So let's say you're taking all 3 of them are 12 lakhs, and all 3 of them are paid to different people. And because all 3 of them are more than 2,40,000, you will need to deduct TDS and pay to the government. But guys, just telling you, by the way, if there are more than 2 people, let's say the land belonged to 2 people and you were paying 6 lakhs, even in that case, you have to see it individually per person, not totally. So the TDS amount 2,40,000 threshold limit has to be seen per person. And when you're paying them, you need to deduct TDS, or when you're crediting them, you need to deduct TDS and you need to pay to the government. Now, what are the rates? Guys, for plant and machinery, it's only 2% because there's not much margin in that. And then for furniture and for land and building, it is 10%. So these are the 2 rates for TDS which you need to deduct and pay to the government. That's it, guys. 194I. I is initially on rent. The rent threshold is 2,40,000. What are you taking on rent? Land and building, plant and machinery, or furniture. For plant and machinery, it's only 2% because there's not too much margin, honestly, for the other person there. For furniture and for land and building, it's 10%. Of course, COVID rates have reduced, but I'll tell you in the end what has the reduction been. You don't need to buy hard different rates. Just remember these rates, and I'll top it up with the COVID reduction in rates. But guys, a couple of points here. In case you're warehousing, that means you're not just using it as a cafe, but let's say you're warehousing, or you're storing some goods. Even in that case, that is covered under 194I. Even that is called rent. But if someone is giving you cooling services, let's say it's a cool storage and you put your perishable goods there, in that case it is not rent because they're giving you services over and above rent. Also, at the airport when you park your aircrafts, etc., when you pay, or per passenger for the landing and takeoff when you pay, that's also not rent. That's also a services that is not covered under 194I. It's covered under different sections. So warehousing is covered, whereas cooling services, airport services are not covered, guys, and 2,40,000 has to be seen individually. Now, guys, whenever someone gives you a rent, let's say a cafe on rent, they'll obviously take a deposit from you. If the deposit is supposed to come back to you, that means the refundable deposit, then you've not honestly paid him, it's going to come back to you. So there is no TDS on that. But if it's a non-refundable deposit, that means you pay and it's never going to come back to you, then in that case, TDS will apply. That is it, guys. 194I. For a lot of people, feel difficult, but this is very simple. Initially, you rent. But honestly, as a small person, who's a small person? Small persons are individuals and HUFs. In our classrooms, you know what is a small person, guys. Individual HUF who are not subject to audit. That means from this year onwards is a threshold limit. If their threshold limit in business is not more than 1 crore or in profession is not more than 50 lakh, they are small people. That is small individuals and small HUFs. For them, this is a very difficult task. You need to deduct TDS, you need to pay TDS, you need to file a TDS returns, etc. So they are told, listen, you guys are small, don't bother. This rule does not apply to you. So let's summarize 194I. I is initially, what do? Initially, you rent it out. You're renting the three things out, but rates differ, guys. 2% and 10%. 2% for plant and machinery because low margins, and 10% for land and building and furniture because high margins. The threshold limit is 2,40,000 per category as well as per person. You have to see that category. Warehousing is rent, cooling is not rent, airport is not rent. Refundable deposit is coming back to you. So on that, there is no TDS. And it for individuals and HUFs just small. Guys, we'll just call it small now. Small individuals, small HUFs, don't bother. This one will not bother you. Guys, that is 194I. Let's move to the next one. So what happened after you initially rented it? The cafe was a huge success. So you decided to acquire the immovable property. So immovable property, when you acquire, that is section 194IA. Guys, these are shortcuts which might look very, very small and simple, but in the exam, they are huge help because you don't need to remember everything. Just remember the story, and all the TDS sections are connected to this cafe story. So 194IA, that is immovable property acquire. When you acquire an immovable property and you pay. So let's say this cafe, you really liked it. So you went to the owner. The owner said, yes, I will sell it to you. So you can buy it and you can pay me 55 lakh rupees. So again, you're the payer and the person is the receiver, and you are paying 55 lakh rupees for it. Again, the same thing, guys. At the time of payment or at the time of credit, whichever is earlier, you need to pay 1% only. Why such a small amount? Because here, guys, the government just wants to know who's buying such properties and who's selling such properties. So it's more like a formality. So only 1% of the amount, and that too, guys, this is applicable only and only if the payment or if the transaction amount, stamp duty value, is more than 50 lakhs. So the stamp duty value is more than 50 lakh only and only when this case, this will apply. Next, it is only 1% at the time of payment and credit. And whether it's applied to everyone, yes, it will apply to everyone, because if you can buy a property with more than 50 lakh, you can definitely do the TDS formalities. And when do you need to pay this TDS? You get 30 days time within which you need to pay this TDS. Let's quickly recap by section 194IA, immovable property, but now you're not renting it, you're acquiring it. Whenever you're acquiring it and the value is more than 50 lakh rupees, then you deduct TDS. At what rate? Only 1%, because the government only wants to know who's buying these properties. Applies to everyone, and you have 30 days to make the payment to the government ahead. Guys, the next, unfortunately, you bought this property and the government said that the metro should go above it. So they legally acquired this. It's called compulsory acquisition, but compulsory acquisition in our shortcut is legally acquired because that's the section, guys. 194LA, that is legally acquired. So the government came to you, knocked on your door. They said that, listen, we really want this property. The metro has to go above it. So we want to buy it. And hence here, the payer will be the government, or any department of the government, and you will be the receiver. And when they pay you, so guys, here is a difference. Because they can pay you late, early, etc., it is only at the time of payment that TDS will apply, not before. Also guys, most of these payers are government, so hence it's not payment of credit for them, that is only at the time of payment. They need to deduct TDS at the rate of 10%. They need to deduct TDS at the rate of 10% at the time of payment, but only if the transaction value is more than 2,50,000. Now, mind you guys, both immovable property acquired by you as well as legally acquired property acquired by them does not apply to agriculture properties. So if it's an agricultural land, whether in rural area or urban area, this does not apply to them. So let's summarize guys. 194 LA is legally acquired, that means a compulsory acquisition. So whenever they compulsory acquire this property from you and the amount that they are paying you is more than 2.5 lakh rupees, then they will deduct TDS at the rate of 10%. At the time of payment of credit, only payment. Why? Because this payment can be delayed, guys. How do you know when the government pays? So whenever they pay, they will deduct TDS and they will pay. Guys, initial compensation, enhanced compensation, whatever compensation it is, they will have to deduct TDS as and when they make you the payment. Guys, both LA and IA does not apply to agricultural properties. Just recapping, guys. 194I is initially, 194I is immovable property acquired, and 194 LA is legally acquired. This is 10% because the government wants to collect tax. This is 1% because the government just wants to know who's buying, who's acquiring these properties. And here it's 2% and 10% depending on different margin that the government has. Guys, this one, and this one, these do not apply to agricultural properties, and these do not apply to small person, that is individual nature. For the small people, it does not apply to them. Now guys, quick thing. Section 197B, they felt really bad that COVID happened. And because of which people's income reduced a little. So to manage the cash flow, the government said, we will not deduct as much TDS as we used to deduct. So whenever there is a rate, let's say 10%, that will be reduced by 1/4. So 10% will be reduced by 1/4, that is 2.5% will be reduced. So now you'll have to deduct only at the rate of 7.5%. So this is a standard deduction. Most TDS sections have this, that because of TDS, because of COVID, they feel bad. So 197B, they feel bad about it, and hence they've reduced it by 1/4. In most cases of TDS, they've reduced it by 1/4. So you don't need to remember these reduced rates because they're 0.5 and that's confusing. Remember the big rates, deduct in the exam and put those numbers in the exam. So here it will be 7.5. And here again, it will be 2 into 1/4. You'll have to remove that. So 1.5%. And that's how you'll have to calculate. So section 194A, 194I, is initially, IA is immovable property acquire, and LA is legally acquire. Guys, this same example of COVID cafe or a cafe that is open is there throughout TDS. The entire chapter can be done so well with the help of that example. I hope you understood these three. Watch out for more. And as I said, guys, SMAT quickies help shorten, help uncomplicate things for you. That's what happens in my lectures too. Over to them. Thank you.